there is a hierarchy over here, and in that hierarchy today I've just spoken to you about the crown, okay, the jewel, okay, in that entire crown is that IB30. Okay, we will talk about the weights over here, but for me, in an order flow chart, the one, okay, which stands out the most in terms of weightage, in terms of the weight of the signal in the order flow chart is always your IB30 signal. Right, just think of it as your Nifty 50 with your Reliance, SBI, all these, okay, instruments put together. You will see, okay, that Reliance has got a higher weightage, okay, than the other thing, even though you're trading the Nifty 50, right? So there will be some, okay, which have got a higher weightage, okay, than the others, okay, which have got low weightages, etc., etc. So we give it a priority, and the proper way, okay, to look at all that priority and that hierarchy, okay, as we call it, is to give a lot more weightage, okay, to the initiative buyers and the initiative sellers, right? Then, okay, you can say, okay, you can look at your COT, then you can look at the liquidity in the bar, then you can look at the volume clusters. But it is always a collection of all of these traders and selection of all these traders, okay, which make up the order flow chart. So you start off with IB. Right? There is a hierarchy over here, and in that hierarchy today I've just spoken to you about the crown, okay, the jewel, okay, in that entire crown is that IB30. Okay, we will talk about the weights over here, but for me, in an order flow chart, the one, okay, which stands out the most in terms of weightage, in terms of the weight of the signal in the order flow chart is always your IB30 signal. Right, just think of it as your Nifty 50 with your Reliance, SBI, all these, okay, instruments put together. You will see, okay, that Reliance has got a higher weightage, okay, than the other thing, even though you're trading the Nifty 50, right? So there will be some, okay, which have got a higher weightage, okay, than the others, okay, which have got low weightages, etc., etc. So we give it a priority, and the proper way, okay, to look at all that priority and that hierarchy, okay, as we call it, is to give a lot more weightage, okay, to the initiative buyers and the initiative sellers, right? Then, okay, you can say, okay, you can look at your COT, then you can look at the liquidity in the bar, then you can look at the volume clusters. But it is always a collection of all of these traders and selection of all these traders, okay, which make up the order flow chart. So you start off with IB. Quick sound check. Check. 1, 2, 3. Okay, good evening, everyone. I hope, okay, everyone can hear me loud and clear, and we are all together over here for this session, okay, we are calling on market profile and market structure. So I hope, okay, I'm audible and I'm able to come across to all of you. The last thing you want is enter a webinar and not being able to be seen nor heard. So those issues, okay, I hope are out of the way, and we can, okay, get on to the task of looking at what lies ahead for us in the markets today, right? So the new series of March is begun. and I keep saying this all the time, every time a new series comes in, you have to let go of what has happened in the past and take a fresh card and relook at all the data, all the information which is coming to you on screen, right? Now, here's the reason. Why do we do this? Because every single time a series changes, and most of you would know this, we call it the rollover effect, right? And no one will ever tell you that all rollovers for whichever stock, for whichever index, for whatever else you're doing in the markets, as you roll between series, no one rollover is 100% complete. That means a lot of the money which is there in a previous series does not come into the new series in terms of rollover activity. And if you look at that data, which is there always in front of you, you will see that that rollover activity is in the region of about 45 to about 65% across stocks, across indices. Now, what is the meaning of all this? This is telling you that not everybody who carried a bias in the previous series carries that same bias into the next series. If that was the case, the rollover would have been 100%. Everybody would have carried the exact same bias into the new series. But data tells you that this is not the case. And when data changes, as a trader, it's our job to ensure that we keep up with the change. We change as well, because there is nothing to this market except reading the data which is there on screen and looking at that information via that data which is there on screen, right? So we began a series of March, and it's going to be a long series of March, and this particular series is a little bit more important because what really happens is during the end of the series, we have the financial year ending also, and a lot of other variables get attached to what really happens at the end of the year. So there's that dollar cost averaging factor, there is that profit loss harvesting, and all those concepts they come together end of the March, end of the series of March. So that's why the series of March works a little bit differently from what you would otherwise expect a Jan to do, or Feb to do, or March or April or a May or any other series to do, right? So we'll pay special attention to March, and we'll focus our attention on what can possibly happen in the month of March. So I have a market profile chart on screen, and as usual, our trusted friend is always the market profile chart. Now, why is this the case? Because the market profile chart gives you an underlying view of not just price activity. It tells you about the volume which is happening at those price levels, which you would call your support levels, or you would call your supply levels, resistance levels. It also tells you what is happening at each and every single price level, right? And it also gives you a function of what we call the time element of the market, right? The markets are governed between series also. We have a specific time to trade as derivative traders, and the importance of time cannot be understated. You have to pay attention to how time plays out in the life of a derivatives trader. So you put all of this together, you put price together, you put volume together, and you put time together. What you get in one place is what we call the structure of the market. And the structure of the market always has a story to tell, and that decides the flow of volumes coming into the market. That decides how volume activity is going to be read in the market, and that determines the price action which is there, right? So I tend to look at the structure of the market in terms of structure of any single office or any single residence or an apartment you live in, right? It's got some main pillars, the main beams, it's got a floor, it's got a ceiling, and that in a sense is what we call the structure. But there are times in the market where people attack the beam, the main pillar which is supporting that structure. And I alluded to this, I pointed out to this. They broke a vital structure of the market at that point of time. It was visible to us as market profile traders, and it was an attack on the structure of the bull market. and which is why 5 months later we are where we are, and we are reading the screen in front of us. We've gone from what today's low was about 22,141. We've gone from a high of about 26,277 in a space of 5 months, and we've hit a low of about 22,140. I'm focused on that 22,000 spot level. That is a focus, not just for the entire month of March, but for the next few days, to see how supply works out over there. So we'll talk a little bit more about that as we go forward. But what I want to essentially do this evening is to have a look at the entire activity as it is panning out for the calendar year so far, the calendar year so far, and then we'll break it down into what can be expected in the month of March, and we'll break it down further into what lies ahead for the next few sessions, the next couple of weeks also, right? So the best approach we recommend when we are looking at an entire series, and I'll quickly shift into a Nifty spot chart. So let me get a Nifty spot chart on screen, and let me go into, this is a futures chart. So let me go into a spot chart, and we'll have a look at all the information which is there. So I'll choose Nifty spot TPO, and what I want to do is I want to click on this Y, which is my annual profile. And there's a very interesting thing I want to point out, because I keep looking at this annual profile, and I've spoken about this in the Twitter which is following up also, right? So this is a chart which is loading up. So the one thing on the right is today's profile. This is how we are, and if you zero in over here, this purple zone is the highest volume concentration of the entire year of 2024. And this year, the 2 months which have gone through, we have traded below this 2024 VPOC, volume point of control. Now, what actually is this VPOC? This VPOC is the largest concentration of volume. Translation, simple words, it means that the maximum volume of the entire calendar year 2024 was traded at this zone. What is this zone? This zone is about 24,200 or 24,200, 250 something. This is this zone out over here. Maximum volume was traded over here, right? Because this was a bull market up move in the year 2024. What was this maximum volume? You can say, and it's a deduction you can make, that most of this was buyers, because the buyers took price further up, right up to that 26,277 level. So at this zone, you can say maximum buyer activity has happened, right? And because currently in 2025 we are trading below this highest concentration of volume, you can now understand why there is so much pain in the street, because all these buyers are not profitable. They've been basically what we call upside down, and that is why the pain which is visible on the street is visible because people are not making money. And then when you're upside down, I keep saying this, when you are upside down, when you're not in profit, you are forced to do things which you would otherwise not do. So that is the kind of data which is coming to us. That is why there is so much pain on the streets. People are stopping SIPs. People are not having faith in the markets anymore, because for the simple reason that people are upside down. They are not in profit for those latest investments. Now, why is this important? Because these traders, because they are not in profits and they are forced to do things they would otherwise not do, they can put a effect or put pressure on those ones which have come earlier in the year. So this is how a bull market cycle unwinds. The late people who are late to the structure, people who are late to the move, they start unwinding and they start creating pressure on people who are a little bit earlier in the program. This could be your Jan, Feb, March, right up to those June lows. These were those kind of traders. But if this pressure starts coming in and price starts moving below these levels, then okay, there is okay more pressure okay coming in on this, and then okay we think about okay that profile of 2023, which was also a bull market updo. So it's a series of moves okay which keep happening, and that's why okay we are at a critical zone as to okay what is gonna happen out over here. Now I'll talk to you okay about what is expected in the next couple of sessions ahead and what you should be watching out for. But the underlying message of structure is something okay which you should not ignore, right? Earlier in the year, when I started off and I made that tweet okay on the 1st of Jan, which I spoke about a couple of days back also, what I was looking forward to is a market okay consolidating over here for the duration of 2025. We were definitely okay not expecting okay the market okay to go up above the highs of 2024 in the calendar year 2025. That can happen, you know, okay, bull markets okay keep rising, and the bull market okay can be born again, and there would be new highs made on the index. But that's okay not what we are talking about over here. We are not okay wanting to know what the market can do in a 2028 or a 2029 or a 2030. What we are interested to know is what the market wants to do today, couple of days from now, maybe a couple of weeks from now, maybe 1 month from now, so that we can take action now, or we can okay decide okay what we can do okay with our immediate focus. I'm least interested okay to talk about a 50,000 Nifty or a 100,000 Nifty in 2032 2035, because it is not important to the kind of decisions we are going to be making today, tomorrow, maybe okay a week from now, maybe for 1 month from now, right? So bear with me okay. What we'll do is we'll adopt a short-term focus, and my maximum thing to do over here is to look at the market in terms of a 1 year horizon and break that 1 year down into 1 month, break that 1 month down into 1 week, and break that 1 week down into 1 day, you know, and then 1 day into about 30-minute periods, etc., so that we can be in a position to make decisions now, as in okay the moment okay which is on us, right? So this is the yearly structure. There is risk in this structure because we are at 2025 lows, and today also okay we made a new 2025 lows. If we get signs of initiative selling over here and we start putting pressure on this support okay which is built up okay through that month of June and the earlier part of 2025, then if these guys okay start unwinding, there could be further pressure okay which is building up in the markets. How do we know okay whether there'll be existing supply? I'll talk to you in a bit okay, and I'll share a chart with you about how you can okay pick that supply real time. And we have to okay look at supply on a day-to-day basis. This is something okay which is dynamic, which is changing, and is not about yesterday's information. It's about the current day information. It's about what is happening in the now. Okay, and if we keep okay monitoring that on a day-to-day basis, we get a very clear idea about what demand wants to do and what supply wants to do, right? So back to this chart. This is okay where we are on the yearly time frame, and I'd like to go into the monthly time frame, and this is okay where we are on the monthly time frame. So February okay we closed at the lowest point right over here, the lowest point, and we are lower okay than where we are, and I've spoken about this level okay as being important. This is that June low, right? And if you were with me on my Twitter timeline, when that June low, this was actually June 4th. And when this was happening, this was that big election day move, right? When this move happened, and we spoke about how this market okay was going lower. And whilst it was putting these last legs down, right? It was around that 21,800, 22,000. This entire drop happened on green cot. That means okay there was no added supply out over here. Just as a context to some of you okay who may have forgotten what really happened on that day, we had the exit polls which misled the market, and I'll use the word misled because the market okay gapped up 1 day before the actual results came in, and there was a lot of speculative buying okay which came in. Because of that okay we were on a higher platform than we were when those results came in. Those people were caught upside down. They had built long speculative positions, and they were forced to cut their positions exactly at 9:15. A series of initiative selling candles okay came in, and we had dropped a lot that day, right up to this low of about 21,400. All that is past, all that is history. But what is important to know is that in this last 800 to about 1000 points of the move of this June low, and this is the reason, okay, I call this as an important support, right? Okay, at this low on that particular day, I was trading live, and so were a number of traders, okay, with me. We didn't see evidence of supply over here, right? All we saw was a lot of demand coming back into the market. So if this market, okay, comes back around this zone, from an order flow perspective and from a market profile perspective, we want to see, okay, if there is continuation of the same or whether things have changed, right? So there was no supply in this zone. Is the market, okay, going to put new supply in this zone as it trades back over there? And if it does not, if there is a repeat of what happened over here, no supply here, no supply here, then the market, okay, gives you a bounce, right? So that is, okay, the rule of structure. For a previous demand zone to be broken, you have to have added supply over there, right? That's how, okay, breakdowns happen. And for a breakout to happen, a previous supply has to be taken out, demand added, and that's how, okay, we call something called a breakout in the market. Now this is a zone, you know, from previous data that there was no supply, and then, okay, you read price action later, market bounce, okay, and then, okay, you know, okay, that there was no supply. But this other information from price comes in, okay, about 3 and 4 days later. What you need to do is immediately as it is happening in those 5 minutes, 10 minutes, 30 minutes, use order flow data to read whether there is demand or supply, so you are ahead of the pack. In fact, if you go back, okay, to my timeline on Twitter, when I saw this happening, this was one of those big divergences. I think it was around 12:30 or something that day, 4th of June, when I put it out on Twitter, okay, that we have a swing low in place, because what we've seen in order flow was something, okay, very, very different. And granted, it was one of those, you know, once in a 5-year kind of an activity. And that's why, okay, the market, okay, went from here right up to about 26,277, which was a move of about 4,000 odd points or something, because, okay, the divergence over here was there. So what we need to do is, as this market, okay, comes back, okay, to this zone, especially, okay, starting, okay, from these singles around this 21,800, where we are actually now 150 points do not make a lot of difference when it comes to the swing perspective. This is, okay, what you need to be watching. So these lows where we are currently and the underlying factor over here. Now, today's low was about that 22,000 spot. Remember, reminder, this is a spot chart which we looked at. We don't get volume data in spot, so I'll have to make a switch to an order flow Nifty futures chart, right? And this is the 30-minute chart, and this is, okay, what I was explaining earlier. What I got to see was right over here, all this green which is there in caught in this third row, this IB bar, okay, and the absence, okay, of initiative sellers tells me still that this particular zone, this is 22,140 futures equivalent to 22,000 spot, right? So as of the moment, this was 3:30 p.m. close, and today was the 3rd of March. I am not seeing evidence of supply on my chart. This is data, this is information which is coming to me. Did I see supply over here previously when the market was trading this zone of 22,000? The last time it traded was the 4th of June, like I said. At those day, that day, and those days, okay, when the market was testing that low, I also didn't see evidence of supply, right? So something, okay, is matching over here. The market is giving me structure-wise the same pattern, which is why, okay, we are looking to see if this market wants to bounce from here, right? Now, how will you know, okay, that the market is bouncing? One is, okay, for a big bounce to happen, you got to see initiative buying candles. So we saw, okay, one over here, and now what you need to do is you need to, okay, look at your process in a 30-minute time frame, okay, and see, okay, what the market, okay, wants to do over here, right? So the rules of our process are very clear. Every time, okay, you see an IB30 bar, okay, you go buy above the high of the 30 bar, and you put a stop loss at the low of the 30 bar. And the process says that this is valid for 10 bars, right? The rule of 10 bars, okay, which we talk about. So as long as over the next 10 bars this 22,183 will hold, you can say that the market is having a support at 22,183, right? Now, if you bought about 22,249, what could be your target? Your target, okay, is just this range calculated upwards from here to give you a 1:1 ratio, right? So this is 22,250. This is say about 22,180. So that's about 70 points from here. So 22,250 plus 70. Okay, you were expecting okay around 22,320 over here. The market okay went up to 22,310 today. You got okay some supply. People started booking a little bit early because this is still early days for the market over here. This supply okay pushed the market down lower and we closed over here. But nevertheless, okay, it's still not 10 bars done. This 1, 2, 3, 4, and we'll wait and see whether this structure or this plan okay can work for ourselves tomorrow, right? So just to make this point again about how okay we work out, and so that okay people do not have that wrong expectation. So your risk in this setup is about 70 points. 22,250, you're buying above it. The low of it is about 22,180. So the risk of the stop loss is about 70 points lower. So when your risk is there, minimum okay what you look for is 1:1, and strong IB bars okay will give you more than a 1:1. But this is a high probability signal. Okay, this is a signal okay which is better than any other signals okay which are there on the left of the chart. So I'll work with a 1:1 kind of a setup okay for this, and I'll be careful okay if it goes up to about 320, which is completing okay that 1:1 setup. I'll be on the lookout for signs of supply okay to come back over here. Our target over here, we entered into a long order around here 22,250, and our target okay was about 22,325 zone. We fell short okay on that today, and we had to okay quickly back out okay when the market okay started putting some supply over here, and we covered that thing. But we'll look at this opportunity again tomorrow as long as 22,180 holds up on the lower side, right? So this is okay where we are from an order flow perspective. Now what we are doing over here is we are marrying bringing two things together, the information from market structure with something okay called order flow, such that okay you remove all traces okay of that, well, how do I phrase it, okay, that you remove okay all those question marks okay which come in your decision making out. What I have to focus on as a trader is to work with the power of data, work with the power of information on my side, such that okay even though okay the business is called speculating, I'm not throwing darts at a wall. What I'm doing instead is working with concrete informed decisions which are there okay to guide my capital and me as we navigate these markets, right? So I want to make it okay very clear over here. Nobody can predict what the market can do. The market okay cannot be predicted. It's not a market of certainty. There is probability. The best we can do is make assumptions, right? But what really happens is instead of making assumptions, a lot of people okay do predictions, and they do predictions on inaccurate data. And the minute you start predicting what the market can do, instead of anticipating okay what could be a possible outcome, you start predicting, you open yourself up to losses. What we like to advocate over here is to work okay with data, with information, and have a process in place which can help you read that information. That process okay could be just about anything. Okay, everything okay works as long as you are in a position to make some coin, make some money okay for yourself. So for me, that process is market profile and order flow. And for you okay it could be anything or anything okay which is working for you, and it's good as long as okay you can make some profit out of it. But as long as okay you can define yourself alongside a process okay which helps you to interpret information from the market and to explain the chart okay to you, so that okay you are guided on what can happen next, okay, you are in a better phase okay to make out something okay good okay from the chart, something good from the market. The problem happens is that you come into the business, especially the cutthroat world of derivatives, you do not read charts. That is number one problem. Number two is, okay, you cannot read, okay, what the market is trying to do at every single point in time. Then you start making decisions, okay, which are wrong. A seasoned trader, okay, would sit at you and look at all of your trades, and they would tell you, okay, that some of these trades, okay, you should not be able to do at all, right? So just eliminating, okay, those mistakes through proper reading of data, proper reading of charts is what, okay, is helpful, okay, out over here. So for us, it begins, okay, in through that market profile chart. Read structure first using a top-down approach. So I just want to go back quickly and look at, okay, what really happened today. So this is, of course, okay, the Nifty futures chart, and today's Nifty future, right at the morning, if you have the order flow chart open on Friday, as we were looking at these lows, you would have seen immediately, okay, again, the order flow, okay, was not red at all. So today's gap up, okay, was not surprising, right? But what really the market did was it went right into this VWAP of Friday's session, right over here. This is where we opened. And when it opened up, it should have shown a lot more of initiative buyers and aggressive demand over here, especially because it was at what we call the extension handle of Friday, right? See, this is the point, okay, where the first 60 minutes of Friday's session were traded, and we broke down over here. So today's market was there, okay, at this critical juncture, the VWAP of the seller of Friday, as well as this extension handle of Friday. And you can say buyers, okay, failed at this job. They were given the gift of a higher open. They should have capitalized and added IB candles, but we did not see any follow through buying after the gap up, which is why, okay, the market, okay, went down the way it is. And it didn't decline a lot through the futures market, but the movement today was in those puts, okay. A lot of those puts, okay, which came in, they were the ones, okay, which were putting a lot more of the IB activity. So the Nifty, okay, was around over here at 22,000. So we were watching, okay, those 22,300 puts and all right up at the open. This was the time, okay, the initiative activity came in via those puts. I remember, okay, we were trading this, and it was about what, 9:40, 9:45 in the morning, and there was these initiative buyers, okay, which came right through, and they were the ones, okay, who created, okay, that early move down. It was via the options market, right? So just, okay, to pull that up for you, this was a classic pattern, which again is data and information coming to you, and if you have your process right. So this is, okay, how it happened early in the morning, around that 9:30, 9:45 window. All these puts, even 22,500, okay, was, okay, giving you in the money puts, was giving you, okay, strong concrete signals, okay, that the market, okay, wanted to go lower. This was exactly around that 9:45 a.m. window when the B period TPO started, the time price opportunity of the market profile had started. And these are signals, okay, which are high quality signals. Again, the same rules apply. The minute, okay, you see an IB, you go long above the high of the IB, stop loss below the low of the IB. You get a second IB, you again, okay, go long, okay, above this if you're not into a position. Now this is a stronger signal. This is what we call an IB plus IB signal. The stop loss is down here 193, or you can put it at 165. If you see, okay, this market, okay, is convincingly going up and up and up, as long as these initiative buyers are driving the market. This was some strong demand which came in right between that 942 to 948, and this, okay, drove the market down. This was not supported by futures. So you can see, okay, it was an option driven activity, temporary activity. They booked profits, and that is why, okay, the IS came in later, initiative seller, and there was a little bit of to and fro, but most of this, okay, came out later, and the market, okay, dropped, came back, okay, to where it closed at the depot of today. So you can say, okay, that the auction today at the close, that was a Monday, is incomplete. It's not completed. We have closed, okay, at the depot, but going forward into the rest of the week, my focus, okay, was still on that extension handle of Friday. So this is that market profile chart again, and Let me pull up the Nifty instrument. 27th March. So this rejection which happened, this is what we call an initiative selling tail of the market profile right over here. So you are looking to see if this market has got supply down here, and on the evidence of data there is no supply, but there is always been supply coming at higher levels. Specific to this week's action, and I'm not talking about the entire March series, we want to see an auction above this zone. This is where the buyers failed today. And when buyers fail, sellers take advantage. This is the rule of the markets. So we say it all the time: from failed levels from failed moves come fast moves. So every time there is a failure by either a buyer or a seller, if a buyer fails, then the seller takes over, right? And this happened yesterday on Friday. This happened today. From the failed up move of a gap up today, the buyer could not initiate more. The seller took over and drove the market lower. Lower down, we have not seen any big supply coming in at this 22,000. So we have to wait and see if supply comes back over here around this level of 22,375, 360 in the futures. We will see later on tomorrow, Wednesday, Thursday, whether supply comes back or buyers start initiating out over here. So this didn't happen today. Does not mean it's not going to happen tomorrow, and we'll wait and see if there is some kind of activity. So if you have a notebook open, and if you're jotting down what is an important level for the market for the duration of this week, it's been established here, 22,375, and it's not established by me or anybody else. It's been established by the market. And when the market establishes an important zone for the time frame you are in, you got to pay attention to that zone, right? So this is one. The lows of today, because they did not show any supply and we created a small bounce, are important zones for you to take. And I'm also very focused on this strong initiative selling tail of Friday, right? So this and this gap over here are areas where the seller will definitely try to come in at least once. So if we get some kind of a short covering, seller is forced to cover and we start tapping into it, you got to come back to this zone and look to see if the seller wants to come back and initiate at this level back up again, right? So these are the zones. Again, we can make plans about what the market is expected to do and what the market can do, but we cannot say for certainty. For certainty, you'll have to pull up an order flow chart and always trade confidently when the order flow chart is syncing with the move of the markets, with the movement of the markets. Every time a market goes up on order flow not being good, not being green, the market is prone to failure again. And every time a market goes down without order flow confirmation, markets are gonna put in a bounce from those levels again, right? So this is how we do it. It is a process which is being defined through time, and it is something which helps us to navigate the uncertainties of the market. And we do that by reading data of a chart, right? So I hope this is being good. If there are any questions, guys, feel free. This is an open forum. I'll be happy to take any of your questions if you have. So one question is coming about gamma zero. That's a very big topic, and that's a very different topic. So we will cover it in another session some other day, right? Anything specific to market structure and order flow, please feel free to ask. So just to talk about this, I've got in a weekly profile also of the futures. This is where we are. And this is the imbalance which is coming last week. So for a number of sessions last week, we had done this balance. We've broken down into an imbalance. This is the singles I just spoke to in a daily chart, and this gap. The market is going to be critically poised if it comes to this zone, which is also our rollover point, RO point, 2650, 680. So the resistance is here, 22,680, 22,700 zone for the duration of this week, because this is our RO. And if you follow the rules of the RO point, if you follow the rules of the RO point, rollover point, it's a very simple rule: bull above RO point, bear below RO point. So for the duration of the entire series, the market, okay, is still not to be trusted if it stays below the RO point. The RO point is about 22,680 in the March futures. Okay, so questions, okay, have come in about VIX. VIX is currently, guys, okay, very low. So I have this chart of India VIX, okay, which I think I shared this chart also a few days back. So, what we are witness to is not something, okay, which has never happened. I've seen a VIX, okay, drop down to about a level of 8 and 9 also. So currently it's about 13. There was a period, okay, some time back, okay, where we were trading, okay, with a VIX of about 11. So every time, okay, the VIX, okay, goes low, it translates, okay, into a low range activity. That means the highs and lows of the instrument you're tracking are kind of low. So this is not something which has never happened. If you look on the left of the chart, you've seen this all through 2024, that the market liked to trade over here, and the market, okay, has traded over here before. So get used to this. This is, okay, how it is. And this is, okay, where the market has traded the bulk of 2024. So all these people who are telling you, okay, that the VIX is low and this and that, no, that's not the case. Okay, the market has been here before, and there was a big time in about 2023, and I remember this time we were even lower than where we are. So all of that 2023, we were absolutely, okay, down over here, which is much lower, okay, than where we are. So we have seen a lower VIX regime. We could go down to this number of about 10 or 11 also, right? RO point for Bank Nifty is 49,000. 49,000 is the RO point, okay, for Bank Nifty. So the question is, okay, how much demand downside pending in Nifty? The correct answer to that is 0. All stocks, okay, can technically, okay, go to 0, but that's not, okay, what I'm here to tell you. Okay, always never underestimate a market, right? So the market, okay, can keep going down till demand comes to arrest the downside. Never take one level as sacrosanct as whole. It's just a function of time and volume. One big seller, one big institution comes in, your demand, your level is completely gone, right? The best thing you can do is not to rely on levels and work, okay, with the power of data on your side. Okay, so never have this thing in your head, okay, that 21,000 or 22,000 is going to be a level which is going to hold forever. We are not people, okay, who subscribe, okay, to that point of view and believe in that. We believe, okay, that every single resistance can be broken. We also believe that every single support, okay, was created by the market, and because it was created by the market, it can be broken by the market. So be alive, okay, to all kinds of possibilities. So the question is, so question is, how do you define the IB as a low quality IB or a high quality IB? I presume, okay, that is the initiative buying. So the COT is bigger on the buy side, the IB candle, that's technically a stronger IB candle. And if it's low on the IB buy candle, then it's a low quality signal. Conversely, okay, if the initiative selling COT is large, okay, like about, say, about 8,000 or 10,000, then that selling inside that candle is technically more superior, more initiative, more stronger, and that's how, okay, you can work, okay, with that piece of information. IB is, yeah, the other IB, the initial balance, that's not to be confused with initiative buying. The initial balance of the market profile is the first 60 minutes of the session. So mid-cap Nifty, that view I have shared already. So if you are a mid-cap Nifty trader, always use a yearly profile and get good at reading this, guys, because this is what is needed for us as derivative traders, the understanding of structure and understanding of volume. If you see the mid-cap Nifty is again similar to what we've seen in the Nifty, and it's there at that largest concentration point still. Now this is this zone has been created over a period of 1 year. So don't think of it as something which is holding for 20 minutes, 30 minutes, or 1 day or 2 days. Just try to give it a couple of days over here. I'll give it 1 week also and see if this market sustains below this zone, which is that 10,800 mark. Currently it's trading over there, but if it starts moving below 10,800, that is a sign of big problems coming up in the mid cap Nifty. Right? So you can drop something similar, and if you can read a market profile chart, you'll be able to understand exactly what the market is doing at every single point in time. I highly recommend, if you're trading derivatives, that you get a very good knowledge, a very good understanding about how to work with market structure, because it is critical. The days of reading price action and taking decisions based on price action are completely over, and it's the reason why a number of traders are making a lot of losses in the market, because it's one dimensional, just looking at price activity. What we recommend is a three-dimensional approach, and we have covered all of what I discussed in this e-course, and we can speak and understand a lot more about what this market wants to do by equipping yourself to understand information better. So this is there on our website, 12 videos, 300 minutes, roughly about 6 hours, and it's gonna prepare you to understand the information of the markets better. Right? If you want a real-time hand holding in market hours, then we have VMR, which basically goes into you understanding all the charts which we look at, not post-market, or not after 1 day and 1 week, but in a live market situation. So you get armed with some charts, the order flow charts, market profile charts, and you can have a look at how we do it exactly when the thing is happening in regular market hours. Right? So this is our VMR program. And if you're just beginning and you want to understand how we go about understanding all this, then our forum section has daily, weekly, and monthly posts where we post every day and we update with information about the market. So you'll get this in the forum, as well as we have a curated list of some posts which you have to read. This is in the must read section, where we look at basically our understanding of market profile and order flow, and have some visual markers, some data points for you to go out and understand how you should be thinking about the way you should be looking at markets. Right? So I hope I've covered ground about where we are in the month of March. It's gonna be a defining series. The seller has done his job over 5 months. We are focused on that 22,000 zone. We are focused on that 22,000 zone at least for the next few days. And if that breaks down, there is that big support around that 21,280, 21,300 mark. Beyond that, it's going to be very difficult to talk about what can happen. But hey, this is a market which is driven by supply and demand, and there is nothing else to the market except supply and demand. And all you have to do is visualize this market in terms of demand and supply. If supply keeps adding, the market has no option but to keep going down. Right? To arrest the downside, the market has to see demand, and demand when it comes is going to arrest the downside which we've been seeing for the past 5 months. Right? So if you're looking at your charts, look to see if there is demand coming back in the markets, and when you see demand coming into the markets, that's the time you buy. Bottom fishing is not going to help anybody. Don't try to pick up tops, don't try to pick up bottoms. Look for evidence in data. Look to see if data can confirm what you're seeing, and when it confirms, that's the time you go out and enter. Right? So I hope this has been helpful, and this is giving you an understanding about how we look at markets and how to understand markets. We will keep it going. You can follow me on Twitter to keep an updated view about what is happening, And for these charts, the charts are from charts.vtrender.com, and you can get these charts exactly what I'm looking at in these things at charts.vtrender.com. Right. So I'll sign off for now. Thank you all for listening in, and do join us for our Thursday session at 5 p.m. That's the time we will review what we just discussed today, and we'll take a further look at how we can pick up the information from the charts again. Thank you all for joining in. Signing off for now. I'll see you in our next session. Thank you all guys.